Alright guys, welcome back to another edition of Forex Tech Magazine. Today is February 25th, 2019. This is your host, Lewis, and I hope you guys are doing well. If you haven't made any money so far this year, hang tight. Hopefully we can share with you some tips and tidbits to help you turn that around and get you profitable here still in the new year. If you have been making money, then congratulations to you. You're doing well. Before we get into any of that, let's get into this. And this is the disclaimer, and it goes a little something like this. Any and all information shared with you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. Nothing that we share with you should be considered to be investment advice. If you are in need or you're seeking investment advice, then I'm suggesting you be to seek out the assistance of a licensed, competent advisor. Now that we got that out of the way, let's go ahead and get into this. Look at some trades. Bam. And let's look at the, here we go. Whew, about to sneeze. Yeah, excuse me. Oh, man. First one we're going to get into is the Great Brent Pound Zillion Dollar. Let's look at this one right here. Towards the end of last week, some of these pairs were actually starting to move up. And we were able to capitalize a little bit off of some of these. We actually put in, I think it was like an additional 6,000 last week off of these pairs. But as you can see, that move up has since reversed and start to pull back. And if you notice here, this right here is your support resistance line. And then, of course, if you notice, this right here was your downward trend line. Price was able to go up above, bounce off the support resistance line, push back up before pulling back down through. And actually, if you look at it here, going through your support, your downward trend line, let's extend that out. Look at the extent of this here. So right now it's retesting that support resistance line. That downward trend line. So this is one of those ones where it went up like it was going through, had some momentum behind it, and then just everything got wiped out and pushed back down. And we kind of talked about this a while ago with these Great Brent Pound pairs, that there's going to be a lot of fluctuation in the market until the market kind of can really get a really determined direction as far as what's going to happen with the Brexit. So just kind of be prepared for that. So it's one of things where you got to still kind of just stay alert, keep watching. And if you're going to trade, and this kind of brings home the point that I was making one time too, the risk-free strategy for me is the overall better strategy. I know sometimes you're going to, you got to be vigilant as far as watching your trades. You can also put on alerts and set your trading for some depending on how sophisticated your software is, you can set it up for like some certain market situations to occur, and then automatically get you into the trade and get you out of the trade when a certain market condition comes into place as well. If that's the case, then yeah, definitely do it, because I think that sorry, I'm looking at a couple things here. Yeah, for my own personal opinion, and just off of trade experience, is that when you go in and you're locking in your gains on these trades, right? Because stuff like this is gonna happen, right? This trade looks perfect. You have like 1, 2. You're working on a third Fibonacci sequence here. You crossed over your downward trend line. Price moved up, it bounced, it pulled back, and then it was set to push up, right? And for whatever reason, as it began to push up, it lost momentum and then pulled back. Well, if you got into this thing, in here somewhere, right? And this thing pushed up, You was feeling pretty good, but then all of a sudden you watch it pull all the way back. Now all of a sudden you feeling like crap because you went from seeing your account being positive to the account being negative, right? When all you had to do was just lock in your profits up here, right? Price went up, price pulled back, you still win. Follow what I'm saying? And then as price pull back, all you do is just wait for an opportunity to get back into the market again. And once you get that opportunity to get back into the market again, you get back in, which hasn't really given us that now. I mean, it's potentially here, but we would wait till price cross at least above here, this original downward trend line before we get back in. But you get the idea that there's going to be opportunities for you to get back into the market, and now you're going to get back into the market in a better position than you were previously because you're going to have more money in your account. And that, folks, is what it's all about. Being able to consistently put money in your pocket. See, excuse me. The key to the market, as I said one time before, it's not about getting just this one-time big home run. I mean, I think a lot of times we fall in love with these stories about George Soros and these other traders who, in one day, made $1 billion and all that stuff. That's great if you can do it. That's called That's called like a grand slam. That's a home run, right? You done it all. I mean, you're not, bases are loaded. You come out there and you hit the swing with the big bat. You're bringing everybody in, right? That's great. Doesn't happen every play, right? The way the financial markets work and the key or the secret to the financial markets is just plain simple old compound interest. That's it. That's it. It's compound interest, man. And compound interest is simply, making some money, getting some gains over time where your gains are getting gains, right? So you're going to return on your returns over time. And the only way to do that is to make sure you put on risk-free trades. If you're not putting on risk-free trades, then you're potentially losing money or losing out on money that could be made. Okay? And you hit the home runs, and the home runs are going to come every now and then. What I mean by that is, you put on a risk-free trade, you come in here, put on your trade, price push up, you lock in your gains, and then price continues to push up and go straight on up to your target. Sometimes it may pull back a little bit, but it doesn't pull back to the point where it takes out your stop loss and you're out early on a trade. And you just got to get used to that. Just get used to winning, and even small amounts, but just get used to winning those small amounts over time. If you make it a habit, pretty soon it's just how you trade. This right here is a hold. As you can see, it's not really doing anything. It went up, pull back down, and I just kind of moving sideways. I think this is like one of the ones that it's definitely one of the ones that we made money off of the other week. Yeah. Yep, CAD. Yep, it was. Yeah, but if you look at this right here, it is, price is moving down, downward trend line, price crossed above your support resistance lines, right? Made a big push up, boom, hit this resistance, pull back. As to be expected, it takes energy to burn through or go through resistance, right? And it's just been retesting it ever since, and now it's starting to kind of form lower highs and form lower lows, and when you start forming lower lows and lower highs, that lets you know that you are starting to trend down. So this is like it's moving to the side, but now it's starting to move side and down. And as you can see, lower highs, lower lows, lower highs, move side and down. So we'll stay out of this right here at the moment. This is a hold. And also keep in mind too, I'm looking at this on the hourly chart. You don't have to trade off of one chart time frame. I trade off an hourly chart, maybe a 2-hour chart, not daily or weekly or anything like that, or not even 3 hours or 4. Definitely not 30 or 15 minutes. Typically, the smallest I go is an hour, largest I go is maybe 2, something like that. But you can trade off of different time frames. It just really depends on what your tolerance is and your and what you see. And honestly, what I'm doing when I go on here and I look at this, I'm just waiting for setups to occur in the market. That's it. I'm not trying to force anything. Not trying to make anything happen. Not trying to hope anything occurs. I'm just looking for specific setups, and once they occur, that's when I go in and try to take advantage of it. Great Britain pound, Japanese yen. This one right here was one. It crossed over the downward trend line, and it's been pushing up towards this take profit ever since. Has not hit it as of yet. It's another one. Looks like it was moving down into the side. It's beginning to kind of push back now a little bit. So it may hit this take profit here. Let me go to Phipps for this one. Pretty interesting one. So that's pretty cool. This one right here. It's so late in the game on this one. Once again, want to chase this. If you're already in it and bet you're about to make a profit, good for you. If you haven't gotten into it yet, I probably wouldn't. For one, I think your risk to reward ratio would be off. You're risking 85 pips to get 54 pips. Don't know if it'd be worth it to you because I put the stop loss back here below the swing low. And also, too, this thing's moving sideways. So, if it's moving sideways, and right now, this could be considered to be the tops, right? Then you see that price is already close to the top right now. And so, if that's the case, probably would wait until the price makes a move closer towards the bottom area, or this perceived bottom area, before I would try to go in and place the trade. But once again, that's just because this thing's moving sideways. Of course, if it's trending either up or down, then that's a different criteria as far as how to place the trade. But for right now, I would stay on the sidelines of this one too as well. And if you're already in it, just kind of manage it. Move up your stop loss. If you haven't already got a risk-free trade on that thing, make sure it's a risk-free trade. And just kind of trade like that. And let me just say something real quick too. I've been blessed. I've been fortunate over my career, over my lifetime, to meet a lot of different people and talk to a lot of different folks from a lot of different walks of life. And I will tell you this: don't give up on your dreams. Just talking to someone this weekend, they're really going through a rough time, having a rough go with it. Really great guy, really nice person, and really think a lot of this person. But they were just having a difficult time, and they couldn't seem to understand why, that things just really wasn't happening the way that they felt that it should be happening for them. And I was telling them that, a lot of times in life, man, things just happen. Maybe it's, God do things for a reason to kind of help us learn certain lessons, or to kind of help us gather certain experiences that we will need to help us as we kind of move forward through this life. And not to give up on your dreams, not to give up on ways that you want to do. It's, things are going to get hard, things are going to get tough, but you got to stick with it. Stick with it. Even if you have to slow it down a little bit, but stick with it. And, sometimes slowing down just means you need to take like a mental break from something, because you get so burned out from maybe all of the frustrations and the complications that kind of goes through with learning a new skill set, or being in a new venture or whatever. But don't ever give up on something that you really want in life, or something that you really have passion for. Keep that passion, keep it burning. It's kind of like you ever see those survivor shows or whatever, shows of wilderness shows, people out there in the middle of nowhere. And one of the first things they start to try to do is start trying to make a fire, right? And so what they'll do is they get this one little, they'll be working real hard with some twigs or rocks, whatever. And they get this one little amber, right? And then they take that one little amber, man, and they'll get it and they start blowing on it and putting some more material with it and blowing on, blowing it, and working until it gets really hot until poof, a fire starts going. And sometimes we got to do the same thing in our life, man. Whether it's in relationships or whether it's spiritual life or trading life or whatever it is, an entrepreneur life, whatever it is we're trying to do. And sometimes, it seems like we're working, try to get that little amber to get that spark going so we can get that flame going and get heat. But it's not like it just takes forever. And it seems like no matter what our efforts are, that we can't seem to get it going. We can't even get the amber going well enough to get the flame, a big roaring fire, right, to relax in front of. And a lot of times we just want to give up and we want to quit. But I just want to encourage each and every one of you that hears this or whoever sees this, don't quit. Don't give up, man. It may get hard. You get knocked down, and that's okay. We all get knocked down in life. Just dust yourself up. Brush yourself off. Get back up again when you're ready, and get back in the fight. And sometimes that getting back up here, it may not mean actually being able to participate in what it is that you're participating in, but still educate yourself about the subject matter. Go to the library, go to a bookstore, find more books on it, go on the internet, research more stuff, figure out how you can do better. And then when the opportunity comes for you to get back into that fight, man. Keep fighting, okay? Anyway, I didn't want to get off subject, but I just felt that in my heart. Somebody need to hear that, and I just wanted to just share that with you. Anyway, here goes the Great Britain Pound, Aussie dollar. This is another one that we was able to secure some money with because we locked in that risk-free trade. As you can see, price is moving down, right? Cross above our downward trend line, which is good. Price then proceeded to move sideways before it pulled back. It pulled way back too, right? And then price proceeded to move back up again. And as it moved back up, it hit the D extension here. Now, we were already out over in here because we had got in back over in here somewhere. All right, and as price was moving up, we got out somewhere up in here. All right, because what we didn't want to do, because we got in here, we didn't want to erase any of our gains or take that risk of erasing our gains, so we got in. What we did not do, and this was my fault, was we did not get back in over here when price crossed back up. And simple way to assure that we're getting back in up here, you just put the order in. Price crosses in above here, boom, lock it in. Now, some of you might say, well, what if it just spikes up and then it just moves down? That's true. So, what you could do, depending on your software that you have, some of these things allow you to be very, very, complicated with your orders or whatnot. So you could do that, or you could just put an alert in that monitors and tells you when price crosses above, send you alert text or signal, right? Then you get to your screen, whether it's on your smartphone or whether it's your computer, and then you can look and see what price is doing. And then if you see price like, whoa, this is what we needed to do, this is what's happening, right? Boom, you go ahead and get in and lock in that trade and make that money as the price moves up, continue to move up, right? And you say, oh, that sounds simple. In reality, it actually is pretty simple. It's not that complicated. Trading is not that complicated. The problem is that people make it more complicated than what it is. Remember, price can only move three ways: up, down, and sideways, right? And usually it's moving a combination of the three, right? It means moving, or a combination of two out of the three. So it means it's usually moving up to the side, down to the side. That's pretty much it, man. You just got to figure out which way it's going, right? You can look at the larger time frame to see what the overall movement of the market is, and then you can go back and trade that movement off of a shorter time frame, all right? And use leverage to increase the profitability of the trade and put on the risk-free trade to ensure that you got a guaranteed win. But just also remember that when using leverage, that it can also increase the risk of loss in a trade as well, right? Let's see here. And And this right here is another one of those wait and see, buy and hold type trade. It's moving sideways right now, and if you notice right here, once again, this right here is the upper level, right, of resistance. Here's the bottom level of support. It's up here at resistance right now, so that means that if it follows this continual pattern right here, that means the price is going to come back down, probably somewhere right up in here, right, before it moves back up again. And it means if you're buying right now, right, then you're probably buying at the top, and then you're going to suffer a loss when it pulls back, right? So in order to avoid that, what you would do is just wait. Until price moves back down a little bit more before you get in and take a position. Right now, we're risking about 120 pips to get 100 pips, so not a good risk-reward ratio. And the reason why I say that is because if I was going to trade this right here, I'd put my stop loss here, which is below the last big swing in the market for this pair. And then because it's at the red, then we're looking going red to red. That means my D extension would be out here at the red. And that's what I'd be looking to take profit. But like I said, right now it's kind of moving sideways. I'd stay out of this trade at the moment and just see how it plays out. I mean, it could break above this this obviously resistance here, right, and push forward. And if it does, that's a breakout, and that's great. And once again, you could have your entry somewhere above here, where automatically just boom, it hits once the price crosses above that line. Or you can even have an alert here that lets you know that, hey, price crossed above this line, and you should be vigilant and looking for entry opportunities. If you want to manually input it, or if you want to automatically just put it in, just say when it crossed that line that you can just jump on in. Either way, presents itself as a good opportunity potentially for you to trade. Probably with these type of trades, I wouldn't use a lot of leverage, or probably not much leverage at all. Use the basic minimum. It might be a mini lot or even a micro lot for those particular type trades. I'm more comfortable with using leverage when I see setups that I really like. Like I said before, when I see something where price was in a downtrend, price breaks up, I see it goes through that downward momentum, and I see that, for me, when I see that opportunity, that's when I like to load up on it, because I'm seeing a good bit of participation in the market. And then it also gives me typically enough room to go ahead and put in that risk-free trade. And then once I put that risk-free trade in, I'm really happy because I know that no matter what happens in the market, I'm going to make money. So you got to kind of figure that out and kind of judge for yourself. Trading is one of those things where it's not a one-size-fits-all, but it is one of those things where if you have to learn what your own risk tolerances are in the market, and what makes you comfortable with being in a trade, and what makes you uncomfortable with being in a trade, right? So that way you know how to trade more effectively. This is the Aussie US dollar. This one right here, man, it's crazy because, when we looked at this one time before, I think I showed you this, it's really sitting on a floor. I mean, it's really sitting right there. I mean, it's like multi-years lows where it's sitting at right now. See that? It goes all the way back to 2006. And that's why it's so difficult for this thing to really push all the way down to where it could, to that D extension, right? And that's why I think that for the purposes of the exercise, that this right here may very well be the bottom on this particular pair, right? I don't know that it's going to actually hit that extension. Now, we were able to go in here and to be a little bit profitable off of this, right? Oops. But I gotta tell you, man, I think it's really close to as far as it's gonna go on this particular pair. Right now at the moment, I think it's at the bottom, and I think that there's opportunity for this thing to start to push back up. And I think that opportunity is going to really kind of come into play as soon as we get the announcement on that the trade agreement. Now, of course, if that trade agreement doesn't go through um, with China and U.S., then I think that be on the lookout to complete this Fibonacci sequence here and then some. But if it does go through, which I anticipate it is, but just by looking at the amount of buyers that you got coming in here to keep supporting this thing when it hits this bottom area, then I would expect this thing to push back up. Now, one other word of caution here, one thing that you can look at doing as once again things moving sideways, so this area seems to be the bottom. So it could be a good area to buy, right? And if you notice right here, we can even get a little bit shorter. Go right here. So this is the market top right up in here, right? Give yourself some room to breathe between the bottom and the top. We'd be looking at about 155 pips, right? So once again, if you're looking to trade this pair here, not something I would particularly look at doing right now because it doesn't really fit in with our Fibonacci sequence. But if you're looking to trade off of a range bound type trading strategy, then the buy would be anywhere when it hits down here on this low line, and then the sell is going to be up here in this area, about 155 pips away, right? And it's kind of a trade that you could do all day with this particular pair because the anticipation is that it's going to push up. But it could push down, and if that's the case, still, like always, trade with your risk-free trade strategy, lock in your profits, right? And if it trades down, let it trade down. But, you're going to make your money out of it. Anyway, guys, listen, that's it for me for today. Oops, no, sorry, there's one more. Canadian dollar. Right, price pushed up. It's pulling back down. I was looking at on the hour chart. Price had a huge pullback. Right, broke through the A on the hour chart. Yeah, this is the one that took me out of a trade a couple of days ago. So on the hour chart, still wouldn't get in just yet. We gotta wait for price to cross back over on the daily chart. However, we are still showing upward momentum. Right, still showing. All right, these are higher highs, higher lows. Price is still pushing up. All right, there's a pullback. It looks like it's carving out something here. Price should push up. So anyway, still looks to be a buy on the daily on the larger scale. Just that right now on the smaller scale, it is a hold and wait on the hourly chart. And you can check the 2-hour chart or 4-hour chart and see if it makes sense for you to get into this particular trade on one of those charts. But on the hour chart right now, I have to tell you nah. Hold and wait on that one before you enter this particular pair. Anyway, guys, that's it for me tonight. Hey, listen, thanks for joining me. Hopefully, I was able to share something with you that makes sense and help you make you a better, profitable trader. Join us tomorrow, back same time. Hopefully, we can help you out again. Anyway, take care of yourself. God bless, and I will see you in another 23 hours. Bye.